Are you planning to start or already running a business in Morocco in 2026? Then you absolutely need to understand how business tax really works, because one small mistake can cost you penalties, stress, and serious cash flow problems. In this video, I'm going to break down corporate tax, VAT, and the main compliance rules in Morocco in simple, clear English. No complicated legal language, just what you actually need to know. Whether you're a student, a beginner entrepreneur, or a small business owner, this guide will help you understand how the Moroccan tax system works in 2026 and how to stay compliant from day one. Let's start with the most important question. What taxes does a company in Morocco actually pay? There are three main categories you must understand. First, corporate tax on profits. Second, VAT on sales. And third, social and administrative compliance obligations. Let's begin with corporate tax. In Morocco, companies pay corporate income tax on their net profit. That means your revenue minus your expenses, not your total sales, not your turnover, your actual profit. And here's something very important. Morocco uses a progressive tax system. That means the tax rate depends on how much profit your company makes. The higher the profit, the higher the rate. For small companies with lower profits, the rate is lower. For larger companies generating significant profit, the rate can go above 30%. One of the biggest mistakes business owners make is focusing only on revenue. But tax is calculated on profit, not turnover. If your expenses are not properly recorded, you could end up paying more tax than necessary. This is why good accounting is not optional. Proper bookkeeping helps you optimize your tax legally and avoid unpleasant surprises at the end of the year. Now let's move to VAT, which in Morocco is called TVA. VAT is a tax you collect on behalf of the government. It is not your money. The standard VAT rate in Morocco is 20%. However, depending on your activity, some products and services benefit from reduced rates like 7%, 10%, or 14%. If your annual turnover exceeds the legal threshold, VAT registration becomes mandatory. That means you must charge VAT on your invoices and submit VAT declarations monthly or quarterly, depending on your situation. But here's the key concept. The VAT you collect from your customers is reduced by the VAT you already paid on your business purchases. The difference is what you pay to the tax authority. If you manage VAT correctly, it becomes neutral. If you manage it poorly, it becomes a cash flow nightmare. Now let's talk about compliance. This is where many businesses in Morocco face penalties. Companies must file an annual corporate tax return. They must submit regular VAT declarations. If they have employees, they must declare payroll taxes and social security contributions. And all of this must be done within strict deadlines. Missing a deadline can lead to financial penalties, interest charges, and sometimes even a tax audit. And audits are stressful, time-consuming, and expensive. And if you need professional support, Neo Expertise helps businesses in Morocco with corporate tax, VAT structuring, and full compliance strategy. Check the link in the description and let's build your business the right way.